everyone. Welcome back to another episode of the Agent Advantage podcast. It's a solo episode today, and I have here April Reichert. She is from Guild Mortgage here in Washington. We're going to talk a little bit today about mortgage basics, what's important for you to know as an agent, how to counsel your consumers, and everything in between. So welcome, April.
Thank you.
And we have Money with us today, too. Money the mortgage dog.
Yes.
She'll be popping in and out. She's very interested in the podcast. If you want to introduce yourself and just kind of let the listeners know a little bit about you. April is our go-to lender here in Washington. We use her, if we can, for every single transaction. She's wonderful. I wanted to bring her on because she's also very relatable and just talk a little bit about the mortgage side of things, kind of who you are, what you see in the industry, and all of that.
Thank you. I've been doing mortgages since 2001. Which sometimes it's not always about how long you've been doing it. It's more about how many families you've helped. Because the more people you help, the more things that you see.
Right. And that's true for real estate, too.
Yes.
It's really true probably in any profession you're in.
Yes.
The more experience you have working with people and just different situations. Because as you know, we have lots of issues that come up with real estate on both sides.
Oh, yeah.
How long have you been in the industry, you said?
Since 2001.
You're very seasoned. You don't look like you could be in the industry.
No, it's funny. It's like the rates are kind of close to where they were when I started.
Yeah. And so you've seen us move from different interest rates. I mean, from back in 2001. What were the interest rates like?
My first loan was 7.25.
Okay. So we're very close to that.
Yeah.
And moving from that to, sorry, she's distracting me. You're just so sweet. Are you going to be a podcast girl? I want to talk a little bit about Guild Mortgage, who you work for. I know I don't know if you guys are local just to Washington or if you're national. Can you tell us a little bit about
so Guild is national. I've been there almost 11 years. Okay. And they do have a really big presence here in the Northwest.
They do, yeah. A lot of
really good reputation.
A lot of brokers here.
Guild is typically the #1 lender for down payment assistance programs. So we're really passionate about those kind of loans. I like Guild because it's not like working at a bank. We can get very creative. They care about the person. They try every way possible to help somebody get pre-approved and get a house.
Okay, great. And you've helped a lot of my people who have been denied otherwise or have had really specific circumstances where they might not have been able to qualify beforehand. For newer agents, can we talk a little bit about what that whole process looks like? If someone was to come to me as a first-time home buyer and they say, what does the process look like? What should I expect? What are they going to ask for? Could you kind of give our listeners some insight on at least what you look for for your loan process?
I think the best way is to coach your buyers. You're going to need to have your credit checked, whether it's a soft credit pull or hard credit pull. The lender's going to ask you for 2 pay stubs, 2 years of W-2s, and 2 bank statements.
Okay.
That's the basics, just so that they're prepared for that.
Okay. So they can start gathering those documents, getting things lined up for that. Do you have any programs for people with 1099? So if they are a real estate agent or someone owning a business, do you have a 12-month bank program, or how do those?
We have a bank statement program where they look at the customer's business bank statement deposits as income. We have other loans called these DSCR loans, which are great for somebody buying an investment property because they only qualify them on the rent that place would make.
Yes.
So,
I've been learning about those. We need to have an episode just on those types of loans because I think even agents would be really surprised by what you can do with those and getting creative with it. I mean, there's a lot you can do. We'll talk about that another time.
Yeah, because 9 out of 10 times a self-employed person is writing off all their income.
Right.
So then I either have to tell them I need you to amend your taxes or show more income. Where those loans, they don't even look at tax returns.
Okay, I didn't know
That's super cool.
That is really cool. Okay. And starting off from those documents, what other things do you see in the industry that you wish people knew more about, or misconceptions with lending? Because we just get what we get told. We look online, we've done certain things through our licensing education and all of that, but we really don't know what goes on behind the scenes or what we can do to make your life a little bit easier. Do you have anything that you'd recommend?
I always think for realtors, it is hard because you have that fine line where you want to keep them engaged and excited and believing that they can be homeowners and not make them feel like there's so much work. But you also can't waste your time when this person might not be qualified at all at all.
We're talking about like a real life situation here too. We're
Like
going
has no business looking at homes. And so just so that everybody's time is valuable, typically the best way is to connect them with a lender is like a text, a 3-way text. And then that way the lender can reach out, schedule an appointment, talk to them, walk the customer through the process. As far as misconceptions, I see a lot of times I'll see buyers and they think, well, I don't really want to be pre-approved. I just kind of want to talk to a lender and give her my income or give my income and my debts. And they tell me, what can I buy? Which I get because it sounds, then you can decide like,
scary.
oh, it's super scary. It takes time. And then it's like, well, what if I don't even have any business buying? But the problem with that is that they could tell the lender, I make this much money an hour. And I could say, tell me what car payments you have in your student loans. But it's not a true approval at all. And then when we get the income documents, maybe they weren't working 40 hours. Maybe they don't have a history of having a bonus. So like customers many times will say like, I make $200,000 a year. But what they might not consider is maybe part of your income was a big bonus and you haven't received it for 2 years. And you haven't received your overtime for 2 years. Or like I had one this week where the customers worked at Boeing for like 15 years. His bonus in 2022 was 50,000. His bonus in 2023 was 50,000. His bonus in 2024 was only 25,000 because Boeing wasn't doing so well. You can't just say, I make a bonus of 50,000 every year.
Yeah, so it's not guaranteed income. And so how do you factor bonuses or commissions or any overtime?
All of that has to have a 2-year history.
Okay.
You have to show that you've received bonus income for 2 years, that you've received overtime, and that you've received commission for 2 years. Yeah.
2 year.
Yeah. And that doesn't mean it has to be the same employer for 2 years. Okay. You could have gone from one employer where you're bonused to the next one and you're bonused. It's just this 2-year look back.
So that 2-year history, does that have to be with the same employer?
No.
It just is 2 years of consistent history for you. Do you know if that's across the board?
That's across the board.
Okay, that's a misconception because across the board, I've always heard 2 years of work history, job history, but it was always my assumption that it was with the same company.
No.
Interesting. And can it be in different fields?
It needs to be pretty consistent.
Okay, so you couldn't be like a nurse for a year and then go work as a bartender for a year. Right. That would be okay.
Yeah. But the other thing people don't realize is, let's say that you graduated from college as a nurse and you got a job, you could get a loan immediately. Your time at college counts as time on the job. On certain loans, your time in high school counts as 2 years on the job.
Wow. So people who are younger who might not have enough work history, it could count towards your.
I have a 19-year-old right now that's pre-approved. He graduated 8 months ago. He has been at his job hourly for 7 months, and he was approved. But what this young guy did that set himself up really well is he had his parents add him as an authorized user to an account. But as soon as he turned 18, he got credit in his own name.
Yeah.
Because you can't get credit in your own name until you're 18.
Until you're 18. And that could put a lot of people back if they are younger people who have a lot of aspirations or are more independent. That might not work for some people.
No.
They can't.
No, but I have another 19-year-old where all of his credit is based on his father's authorized users accounts. And so FHA wanted to see this young guy needs to get his own credit and show us that he has a steady credit for a couple months.
Okay. Interesting. That's really good to know, especially if you're counseling clients too, or clients who have kids or college students, even friends, just being able to tell them, here are some options. And finding also, I was going to mention this earlier, finding a lender that you trust and that you can communicate with. I mean, April, I just call April anytime she would answer, we would just, hit it off. But if you don't feel comfortable finding somebody like that, it makes it a lot tougher to ask questions that you might think are silly or day one that you're like, I have no idea. And then having someone like that on the back end, if a client asks you a question, I can always refer to you. And I don't feel like, oh my gosh, April's going to make fun of me.
No. A good lender is a complete part of your team. They edify you to the customer. Honestly, this is how I feel. You gave us the lead. You had the relationship longer than I did. So if something's going sideways, I'm going to call you first.
Right.
Before I have that conversation with the customer. That way they're not blowing you up going, oh my gosh, April just told me I have to wait 2 months. It's really important. It's such a good relationship and it helps convert more buyer.
Right. And having issues too, and I can talk about the situation that we're in right now.
Yeah.
But having someone who can almost act as a buffer too. And then on the flip side of that, if you don't have a lender, I've worked with lenders that a buyer already had, or there was some arrangement, and they do find out things before you do. And so then the buyer's coming to you saying, well, this, and this happened, but the lender hasn't even contacted you yet. So you look like you're unprepared or don't know what's going on, even if it's not your fault. So we're going to talk about one of the situations we have going on. I had someone contact me, and it was a situation where I believe he spoke with a lender or spoke with an agent. Someone had given him a price point in mind, and that's what he just immediately thought going into it. And he was telling me, I'm going to be approved for this amount. I want to live here. This is what I need. Let's start looking. Well, the problem with that is I didn't have a pre-approval in hand. And so knowing April, having the relationship we have, I reached out to her immediately and I said, this is kind of an interesting situation. This is what he thinks he's going to be approved for. Can you help counsel him? Because I don't work in the financing part. I don't know all the ins and outs. And so when someone is playing hardball with me a little bit on what they can afford and what we need to do to move forward, it's nice to have someone who does know. And that way she can help counsel him in a way that's better than what I could do. So I referred him to her, and she went through all of his financials. She's been going back and forth, and there were some things that came up that were a little concerning, things that I didn't know about and that he really didn't take into consideration. And we're still working on getting him pre-approved and getting him where he wants to be, but the price point's a lot different, which means the area is going to be a lot different. And I had told him a lot of the same things that April had told him, but because she's in the position that she's in, he received it a lot better because she can break down all of the things that you guys talked about, the timing,
Yes,
the income, whatever you guys talk about and figure out. It's way beyond what I have the knowledge or capability to be able to tell him in a way that doesn't seem off-putting, if that makes sense.
And in this situation, it was weird too, because we track everything. So this particular gentleman had been in our system in 2021, credit repair, again in 2023, credit repair. Now his credit is better, but it's hard because you don't want to talk to them and be like, have you ever had a bankruptcy? There's things like that are big deal killers that they might be in the middle of that they don't necessarily tell you. The good part about having a good lender, though, is when we talk about numbers, the customer will always listen to the lender.
Yes.
It's
way more than
the agent. We can have those crunchy conversations.
Yes.
We can talk about debt. We can talk about what they need to pay off.
Right.
And so it is a good buffer, and it's also easier for us to say, you're only approved for $600,000, but you want to be in this area of Seattle. That's not realistic.
Right.
Here's where you can go. So I found that that's really helpful. And I think it's because customers tell us so much and they feel very vulnerable. You know, we have their bank statements, their 401ks, everything. So we always can be a good partner with that. Yeah. So this gentleman, I am going to tell him today that he can buy somewhere south, but it's going to be a lot further south than he thinks.
And I've had that conversation. I've had very similar conversations before. And he was like, no, South Seattle. I'm like, well, the price point, if you're not familiar with Washington State, we do have pretty big gaps in price ranges depending on the area, especially when you're more towards the city of Seattle. And so we've had those conversations, and I had a feeling it would go that way, but he was very adamant, and he wanted to see houses within the first couple days I talked to him. And so that's a really good thing to know as an agent. Having a lender who can, again, be that buffer, but also bring them back down to earth and have those tough conversations when they need to. For me, if I was working with a lender who didn't take the time to reach out to him, didn't take the time to explain the process, explain different things, then I would be on the hook for having those hard conversations and trying to explain to him, hey, this is what's going on. You can't qualify because of this or that. You need to work on credit repair or building a savings account. She can do that in a way because they've had those conversations, they've built that rapport, and she's the professional in that. So I'm not here to pretend I'm a professional in anything else besides what I'm doing. So it really does help, and I think it saves us a little bit of stress. And then on the back end, you can help counsel them, like, maybe these areas are better.
Yes.
You know, and it's kind of like a collaboration. It's a win-win situation once we get over those obstacles. Yeah, I'm like, I highly recommend it to everybody.
Thank you.
Talk to April. Talk to April.
Well, and two, I always feel like we have to be an agent of hope. So we never want to discourage somebody that you can't be a buyer. So it's never a no. It might be not right now.
Yeah.
This is what you need to do. And I think that's the other thing too. Like when you have a buyer, it's all about that speed. Because if we give people the opportunity, they will talk themselves out of becoming a homeowner.
We've talked about that on this podcast.
So you have to move quickly, keep them excited, and show them like you can do this.
That's one thing I've taken from you, and I think we talked about this in our buyer consultation episode, but the excitement. You match that excitement and keeping them engaged, because it really is, if you think about it, you're thinking about hundreds of thousands of dollars no matter where you're at.
Yes.
And that's the biggest investment someone is most likely going to make in their life. And so matching that energy, keeping them engaged, keeping them excited. And one thing too that I really like that you do is your buyer consultations, you also go through earnest money and how the whole escrow process works, because a lot of lenders don't. And so then it falls onto us, which you should be already going over a lot of that stuff anyways. But if there's a disconnect and someone doesn't bring it up, that's extra money that they're going to have to come up with before closing.
Right.
For the earnest money, for inspections, appraisals, all of that costs the buyer money. And that's something that you bring up pretty quickly on.
So, and I didn't always do this, but we're adamant that we don't just give numbers until they have an appointment with me. And it doesn't matter if they've purchased 20 homes or no houses, because things change. I want to walk them through the process. I want them to know what to expect. I want them to know all of the money that's due and the timeline it's due.
Yes, that's important too.
That's so important, because people will be like, I was looking for years and years, and I finally got under contract for a down payment assistance program. And then they said I needed an earnest money, and I didn't have any money. So years ago, I just learned, like, we have to talk money. That's what I do all day. Like, we have to talk money about, here's what's due, here's when it's due. And here's the timeline, and you are in a contract, and then I want this thing by this time, or they might not extend for you. They could have,
and you could lose out on your dream home potentially because we didn't counsel them correctly, or we didn't set them up for that success. Maybe they get paid on the 7th, but their earnest money is going to be due on the 3rd. How are we writing the contract for that? How are we counseling them to save the month before we do that, or vice versa? There's all of these different things to consider. So that's really helpful.
I think too, like a good lender should be able to tell that customer, you're buying $700,000. You can expect your earnest money needs to be a minimum of $4,000. Okay, that's the minimum. Now it could be a different deal, and it's a veteran or somebody with no money, $1,500 then. But it's important to coach them so that they're ready, that when you get ready to write an offer, they're like, oh yeah, April told me I needed that much. It's in my account, ready to go.
So guys, as an agent,
it takes less stress off you guys.
It really is. And we always say like 1 to 3% of the purchase price. That's always negotiable. But if you're competing offers with someone and you have a higher earnest money, and you can counsel them with that too. Hey, this is what April recommends. And then on the back end, you could say, if we get to a situation where we're competing, it might range from 4,000 to 6,000. Would you be comfortable with that 6,000 earnest money, or do we need to prepare to only have the 4,000? Having those honest conversations up front can save you so much headache and honestly frustration from the buyer side. Just saying like, hey, I communicated that from the jump. What's the disconnect? And then if you don't have April, which many of you don't, but talking to your lender and saying like, hey, are you going over this stuff during the buyer consultation? Are you keeping them engaged? And maybe interview with some lenders and find the right fit. Not everyone's going to be meant to work together and have the same rapport or the same business style, but having those conversations and finding the right fit, I think changes your whole business, because you keep people engaged.
Yes.
We keep them engaged on our end. There's no way they're leaving us. We don't give it an option. Nope. They're not shopping for anybody. Once we get them locked in, between the two of us, we know like either she's got it or I got it. And that's just, it's a good peace of mind to know as soon as they talk to April, I know we're good.
And two, I think sometimes you just have to sit back and wait. And you want to know the number, but just wait, because maybe there's additional documentation we had to get. And people have to remember, it's not just a pay stub, it's not just a W-2. We have to verify with that employer, any employer, where they worked the last 2 years. So if we see some discrepancy, well, this is weird. It says salary, but why is she working 20 hours one week and 40 the next?
Yeah.
We have to get that
And you average that, right? So,
Yes.
so if you don't know that, I didn't really know this before April and I were talking, but if they're working hourly, it's an average of what they're working. And does that go back for 2 years, or is that
Typically it's going to be a 12-month look
okay?
back. But when we're talking to people, or you guys are talking to potential buyers, and they say, well, I just got a raise and I make $7 more an hour, you have to ask them, are you salary or are you hourly? Because they're not just going to use the new income.
Right.
They have to average it, because they could make a loan for somebody that's never made that kind of money, and then they can't afford the payments after they get the house.
That makes sense.
Yeah.
So that's something too. And then again, we're not lenders, but when people throw those things out, you can kind of say, hey, this is how it works. I have a great lender who can talk to you about that more in detail. That way you're not like, I have no idea.
But it's good to just sometimes wait and not think like, I need a pre-approval. What are the pre-approval?
Right.
Because it's like, hold on, I want to give you accurate numbers.
Right.
Because again, whatever people hear, that is what they're going to remember. And then if they thought they were approved for 500 and then it's only 400, they're going to be disappointed the whole time.
Yes. And they're going to be looking on Zillow at houses for 500,000, and then it's going to be completely different. And then you lose that excitement. You lose the ability to keep them engaged a lot of times. Something else happens.
Because lending is not like what it used to be. And what we're finding now is that Freddie Mac and FHA, they're just looking at this income differently, especially when somebody's not salary.
Mm-hmm.
So every year they go through different things as far as what their hot spots are, or maybe they tighten up on something. So that's why it's just really about just taking that time to make sure everything's documented and that people are fully pre-approved.
We've talked about this before, fully being the important part, because you can do a conditional or a pre-qualification, and a lot of times other loan companies, especially national companies, will throw out a number, and then once you get to like the closing and the underwriting, then it's different. And that really disappoints people, because they think that they're under contract for a beautiful home at the 500 range. They go through underwriting and they're not qualified for that amount. That's really important. That's a good question to ask your lender too, if they're doing, what would you call it, full underwriting?
Basically, when I think about full underwriting, is that I have all their income, I have all their assets, I have verified their income with their employer and all of their past employers.
Wow.
Even if they had 6 of them, and we took the time, the 2 weeks to get all of those verifications, we have true numbers. For us, we put everybody in front of an underwriter for an actual approval as well. But some companies will do a lot of online stuff, and that's just what the customer gave them. The customer said, I make this much, here's my credit.
But there's no verifying.
Right.
Okay.
So that's where it gets sticky, because they could be looking at a house that they have no business, and you could be wasting your time showing them something
and writing something up, and then you get into hot water too. And then you have a buyer who's like, well, why didn't you tell me that this wasn't on either end?
Yeah.
So it's good to verify.
And I would say too, like, whether you're a seasoned agent or if you've been doing it for a long time, there is nothing wrong with having that hard conversation. You can say, hey, tell me, how approved are you? Did you do this and that? There's nothing wrong with questioning it, because you don't want to waste their time, your time, or the seller's time.
Yeah. I mean, especially on this, and we can also flip this too. If you're on the selling end of it and you're helping a seller sell their home, if you get an offer with a pre-approval letter attached, it's not a bad idea to call that agent or call that lender and say, what is the status of this approval? I don't know if is there any stipulations with privacy wise?
No.
Are you able to call?
No, because like I call whenever somebody makes an offer, I call and I'm like, they're solid, they're salaried, there's no commission, there's no bonus. And so I've had realtors call me and ask. The other week I had somebody ask me, I was like, that's good. She said, how are they with communicating? Because actually these people were terrible. And it was like pulling teeth to get their documents.
Interesting.
So, I mean, I said they're a little difficult, but we are all.
So the listing agent?
Before because they were in multiple offer situation. And that was one where the customer is paying like $150 over the list price. But they were all really good offers. And I thought, well, that is interesting. I've had that question in a long time.
Yeah. And that would be helpful to know too, especially if you're in the multiple offers situation. But just calling the lender and saying, have they submitted all their documents? Are they fully underwritten? Are you still waiting on anything? Are they good communicators? All of that are good.
I think another good question is, how are they paid? Are they salary? Are they self-employed?
See, I'm not taking that.
Because people that have commission, that have bonus or overtime, all of that can change.
Yes.
And another thing too is if somebody has a history of bonus, commission, or overtime, but they haven't received it year to date, you can't use it.
Okay, that's good to know. Yeah.
Yeah, so
Right.
it's anything like that that could kind of kill a deal, potentially.
Okay.
You know, maybe they didn't get as much overtime. Maybe they didn't get that bonus they were counting on at time. So I think those are good questions to ask when you're on the listing side.
And then yeah, for the buyers too, just asking those right questions, connecting with the lender, and making sure the lender is a good communicator as well. I mean, just like how it's probably frustrating if you have an agent who doesn't answer their phone or doesn't get back to you. It goes both ways. And so having somebody, if you're having a financial crisis and it's time sensitive, you want to know that that person's going to respond to you or be able to counsel your people should something come up. Another thing I was going to say too is you said earlier with pre-approving people, it's not a never, it's not a no,
Right.
but it's maybe a not now.
Yeah.
What kind of things do you do to prep people, or what kind of advice can you give agents to help people that they're counseling? Like if someone says, I want to buy a home, but I just don't know where to start. I don't know, I have bad credit, or I don't have a savings account. What can you say to help agents counsel, but also what do you do to help with?
I think that's a great question, because one of the most important things is credit.
Yes.
And it's better to have no credit scores than to have bad credit.
Okay, that's interesting because I didn't have credit for the longest time until I was an adult. My dad did the Dave Ramsey.
Yes.
So it was no credit ever, which is great in a lot of ways, but I couldn't buy anything.
Yeah.
But I've not really heard that. A lot of times people just say, like, you have to have credit, you have to have some history of something. So tell me more about that.
So if somebody has no credit, they just have to build alternative credit.
Okay.
Which sometimes can be difficult. If you've got somebody that's younger that lived at home, that didn't have to pay rent, and mom and dad paid the cell phone bills and the car insurance, that's tougher. And so in that situation, I would say, here's what I want you to do to go get credit, which I want a parent to add them as an authorized user.
And what is an authorized user for those who don't know?
So this is what I did with my kids when they were young. I kind of lied about their age to Capital One. And I said they're a little older than they were.
And that didn't have, you didn't have any issues with that? It
No.
was like,
No.
okay.
And then when credit cards came, I shredded them. They never got to have the credit cards, but they got all of my good history so that by the time they were old enough to buy a house in their early 20s, they had excellent credit.
Okay.
Or when they went to get their first bit of credit, they had good credit from being an authorized user.
So for parents, even if you're an agent and you're a parent listening, or you have parents who have children, this is something that you can do.
You can set them up way ahead of time, because I saw this kid come in and I thought, how is your credit from 1972? And then I realized that I was like, what am I doing? I'm in this industry. I need to take better care of my kids.
When can you start building credit for someone?
You can, technically they have to be 18, technically.
So keep that.
And just like a young person can't go get their own credit till they're 18.
Right. But you can still add them as an authorized user, and there's workarounds with
Yes.
that. Okay. Interesting. And then so they didn't have credit. That's always something you can do to start early on.
Yes.
But if they have poor credit,
If they have poor credit.
I know that can be a case by case situation.
Yeah.
But what do you typically do or recommend for?
So, because we know right off the bat, okay, here, this score is not going to get you a down payment assistance program. The score is not going to get you any program.
Yeah.
So if somebody needs true credit repair, we have them enroll in credit repair.
Okay.
And I tell them it works. It works. You have to do it, but it'll work. And in 6 months, you can buy it.
Who is that through?
We use a couple different vendors.
Like in-house?
Not in-house.
Okay.
If it's so bad that we're sending them someplace where they're paying a fee and that company is monthly helping.
What's the minimum credit score that you can typically approve someone? I know down payment assistance can be different versus like other loan types. What is the range that you really want to see people in, at least to qualify for anything?
We can go down to a 540 credit score with FHA if they have their own money. But typically what happens is I help a lot of people that need down payment assistance. So we want to see a credit score typically over 640. If their credit scores are lower, it's okay. But those people, and this is what I really would encourage you guys, if your customers say, I don't have good credit, and it sounds like an oxymoron, but tell them to save up a little bit of money. When you have bad credit, having a month or two of a house payment is a compensating factor and can help them get a loan.
So you guys take that into consideration when you're looking. Interesting.
And that didn't used to be the case a few years ago.
Okay.
If they have 620, I could guarantee down payment all day long.
Wow.
But now, if they don't have a 640 at least, they have to have something in savings.
Okay. Like some sort of cushion.
Yes.
Okay. We have the credit.
Yep.
We have savings account, either or. And then when people are just, is there any other factors that we might not think of as agents or consumers might not think about? Like, oh, this could come to bite like car payments or anything like that? I know we always say not to do big purchases on credit, like cars or anything like that, when we're under contract or when we're looking, but what about before?
And that's the thing that a lot of people don't understand. It's not so much what you make, it's what you spend.
It's like the debt to income.
It's the debt to income ratio.
Okay.
So talking to buyers about stay at your job. Don't quit your job. Work 40 hours every single week.
We were just talking about this.
All
I'm
the
so glad
time.
you brought that up. Yeah.
Like-
and so if they're even thinking about wanting to buy a home in the next 6 to 12
Yes.
months, work your 40 hours.
Yes. Don't decide.
Save your money.
Don't go on a trip unpaid for a month. Like that's what we're looking at is this consistency.
So stay consistent. If they do have a credit card or their spending habits, stay consistent with those or try to limit. Like for my credit, I just do like my gas and my groceries and that kind of stuff because it's consistent most of the time. I know what I'm spending every month on that. I know what I'm paying per month to help build that credit. Would you say do something like that or?
Yes. And the other thing too that a lot of people think is I need 6 credit cards. No, you don't.
Yeah.
You can have 3 and you will get credit. Credit is just a machine. It's just looking at activity. When it sees that somebody has $5,000 available, but they're only using $200 of it, oh, that's good. Oh, if somebody says, I'm worried about my credit, you can dig deeper and say, but did you pay stuff late? No, everything's just maxed out. Okay, get that stuff paid down. Get it paid down. Because that's going to help your credit scores.
Yes, yeah, I was so confused about that because, again, no one ever taught me this. I had to learn it on my own. But it was like my credit limit would go up. And then if I wasn't spending a certain amount, then my credit score would go down. And so I was like, what is going on? But then they say not to pay it down all the way.
Right.
So there's like a happy medium.
There's a happy medium that credit says, you are so responsible. You have all this money available.
But you don't.
You're only using a little bit of it.
Yeah. You're very conservative.
Yes. Yes.
Okay, that's interesting. And is there anything else that you can think of that like agents come to you with or agents do or say that you're like, hold the phone. You're not helping yourself with that or things that they do that help you in the long run? Something you can think of off the top of your head?
I think if you want to make more money and do more deals, you refer your lender like a partner because that buyer is going to be like, oh, they trust them, then I can trust them.
And it's a direct reflection
That's
of
key.
us as agents too. And so that's really important. I meant to bring that up earlier is whoever you're referring, whether it's a lender, title company, contractor, inspector, it all reflects back on you and your business because they're trusting you. Yeah. They're trusting you to guide them in the right direction for a professional in the industry. And so, yes.
Like when I refer somebody, I don't refer 3 realtors. I say, this is who I'm going to work with, period. And so if you are a realtor that feels that you have to give 3 names, that's fine. You can say, here's 3 people, but this is the person I send my family to.
Yes.
Like, because that is just going to glue that buyer to you. If that buyer's cheating on the realtor, a good lender's going to be like, whoa.
Who is that? Yeah.
Yes.
Well, and vice versa. And it's, again, we always, and there's a lot of laws around like steering and all of that stuff. And so I always give my buyers the option. I say, if you know somebody, if you have someone you're comfortable with, go for it. If you want to price shop, that's your prerogative. I have a couple lenders that I've worked with personally that have gotten the deal done. They're excellent communicators. And I gauge the personality too.
Yes.
Mostly everyone, I refer to April because she has such a good personality and she can be matched with anybody. There are certain lenders who I've referred in the past too who are great. Certain situations they might be a better fit. Giving your people options, of course, so you're not accused of steering or, putting them in a box with rates or whatever, but having someone you feel confident enough with to refer every single time. I think especially with Guild, I don't have any question whether they need to price shop or not.
Thank you.
Because they've had such good experiences and we've built that rapport and I've seen the loans that you guys have and the different programs. Guild has so many different programs and I can't speak for other companies. I've worked with other companies and I've had good experiences. But for Guild specifically, you are able to offer so many different perks and advantages and different programs.
Right.
Can you talk about a few of those?
Oh, yeah, I'd love to.
Some agents don't know or they have a Guild in their area.
And this isn't going to be relative for everybody. If you're in an area that's a super high cost area and everybody's a jumbo loan, they're not going to get this.
Yeah.
But there's always this misconception that I am a first-time home buyer. And I'm going to get all these things. And I'm like, I tell people, yes, you are. And we're going to find you the best program with the most perks and the best rate. Usually what it really comes down to is the income. For us in Seattle, King County, Pierce County, Tacoma, if somebody makes under 109,000 and some change, they can get all these perks. They can get a Home Depot gift card. Yeah, for like $2,500. They can get a $5,000 rate. They get the lower rates, the better MI, mortgage insurance. So many, many times they don't have to be first-time home buyers. But if you make a lot of money, you don't get all the perks.
Isn't that a bummer?
It's just the way these programs work because they're trying to encourage
home ownership and open it up to more groups and stuff, which is great. We love that. It really just depends kind of on what the situation is with the person.
Yes.
Do you offer, I know I saw a pre-approval and it was like assistance with appraisal or inspection or credit or something. Do you guys offer stuff like that? So what is that?
Usually what we'll do is like, we'll pay for the appraisal.
Which is great because that's, I mean, $500 range, at least in our area. That can be a big expense for people.
It could be $1,000.
Yeah, depending on the home, depending on the area. Yeah.
And
you pay for it.
Yes.
And so if something happened, they got the appraisal, but the deal falls through, you guys cover that.
Yes.
And so they're not on the hook.
Right.
And that's a really big perk too. Because sometimes deals just fall apart at no fault to the buyer, and then they just spent $1,500 on inspection and appraisal, and then they have to think about going through that process all over again. Well, that was their nest egg that they kept and they saved for those specific instances. That can help alleviate some of that.
And that's the other reason why I get everybody pre-approved is because we have a closing protection guarantee where if we said we're going to do a loan and we didn't deliver, we'll reimburse them up to $5,000 for their earnest money, and then $1,000 for their inspection fee.
Wow.
I mean, they have to keep their job and do what they're supposed to do.
It's not,
but
not a program to take advantage of, but finding a mortgage company that offers these little perks that make them feel more comfortable and more excited, and it eases the pressure a little bit too, because a lot of people, when they're like, oh my gosh, I didn't know an inspection was $500, or I didn't know an appraisal was up to $1,000. What if something happens? And it's not crazy that things do happen. I mean, things happen all the time. Having an extra cushion definitely helps, and then doesn't discourage them. Then you're still able to go shop for the next house and close the loan and close the deal.
Because even people that know they have good credit and a good job, they still get nervous about the land inside.
Yeah.
Like I was telling them, I'm still the scary part, but after this is done, it's going to be fun.
Yes. Well, it's nice to have someone like you too in that scary part because they feel more comfortable. They feel like, oh, April's got us. She's confident. She's a good communicator, and she's assured us that we're going to get there one way or another.
Yes.
And that's really important too.
Especially when you're in a hard market where there's a lot of competition and you don't want the customers to get discouraged.
Well, and we're moving into that a little bit.
Yes, we are.
Are you starting to see that?
I'm starting to see a lot more multiple offers, and I'm definitely seeing overlist again.
Yeah, I am too. We've seen multiple offers, and then you just said that there was one $150,000.
We had one the other week that went $150,000 overlist, and that buyer, by the way, also got a $25,000 lender credit to cover his closing cost. He did a buy down, but the house appraised for $205,000 over the list price.
Oh wow!
Yeah, so when I called him, he was hoping.
So there was no appraisal gap.
None.
That is so.
I did not tell the listing agent. I just called our customer and said, "You have instant equity, like a lot.
We're good to go on appraisal. That's all you need to know." Wow,
that's nuts.
Crazy. As of March 2025, we're starting to get back into that hot market where things are picking up again. And every part of the transaction, not just your offer, not just seeing the house as soon as it comes on the market and submitting an offer, it's all of these little things, especially if you're in a higher price point, that agents are going to be looking at, that sellers are going to be looking at. Having these different tools in your toolbox to help is going to make all the difference for not only you and your commission that you're making, but also the people that you're serving.
Yeah, it's difficult right now too, because I think whenever as a realtor or a lender, we tell people, listen, when these rates go down a little, they haven't yet.
They're coming out the woodwork.
There's going to be so many more people jumping in that the prices are going to go higher. And I realize that they think we just have commission breath, but they have to understand, like, we're telling you this.
For you.
Yeah, we're especially telling
more money.
Yeah.
Either way,
we'll
prices go up.
We'll be
okay. But for you and your situation, now is probably the time to act. Versus in the next 6 months, a house could be listed for $30,000 more. Your payment goes up by that much more per month over whatever loan you have. It could be hundreds of dollars that fluctuates, even if the interest rate is a little bit lower. So making sure that you're counseling them with that too, then they have an informed decision making.
Yeah, because I've seen so many buyers price themselves out of an area. It's no different than a customer calling me saying, I can't believe I got the house for that 5 years ago. I could never qualify for that now. Yeah. And I'm like, no, you couldn't.
And your equity is insane now.
Yeah.
Welcome.
Yeah, exactly.
Oh, I love that. Well, that's just, the market shifts, it'll go back, it'll go, but knowing what's going on right now too is very helpful.
Yes.
And then just finding someone that you trust, finding someone that has the same values, works the same way. I mean, I'm like, I can't thank you enough for all that you do for us. But if you're not in Washington and don't have access to April, find your April if you don't already.
That's so sweet. Yeah, a good lender is a reflection of you. When a realtor gives us a lead, they're trusting us with their paycheck. Like, it's a big deal.
Yeah. And also too, the more you build the rapport with a lender, the more likely they are to use you too in the future. If they have someone buying in the area that you work heavily in, they might say, okay, well, you're first on my list because you've sent me 5 customers in the last 6 months. That's also something to keep in mind, and just keep that relationship. Even if you're not selling a lot right now, keep those relationships with your lenders, because you never know what can happen. And they know things that we don't know regarding the market. You see the other side of it, and you see lots of different types of transactions that maybe you haven't dealt with yet.
Right.
And as like just talking today, you were telling me all these things. I'm like, wait, I didn't know that was going on. And so having that too, educating yourself while you're waiting for your buyer or while you're waiting to list a home. It's a wealth of knowledge, and you can build from it, and then you're ready to go when you do find that buyer.
Exactly.
Yeah. Thank you so much for coming. Do you have you want to plug your website, your email address, anything like that people can find you if they have any questions, your Instagram or business page?
I could give you my email.
You want to give us your social security number and your phone number and all of the things? Yeah, if you want to plug your email, that way they can reach out to you. And I'll put it in the show notes too. If you are a Washington State agent, are you licensed in any other states?
Yeah. So I'm licensed in Tennessee, California, Oregon. Where else?
Arizona?
Arizona's
a big one, so we get a lot of people buying and selling in both of those states. So I have some people I'll recommend to you too for Arizona. But if you're in any of those states, April can help you. Can't recommend her enough. You can find her at Guild Mortgage. Is it just guildmortgage.com or Guild?
Yeah. It's April Reichert at guildmortgage.net.
Okay. And I will put that in the show notes so you can contact her. You can always contact us if you have any questions about today's episode. We are on Instagram at the Agent Advantage Podcast. And we also have, I don't know why it's doing that. And then you can also email us at theagentadvantagepodcast@gmail.com if you have any questions. Thanks so much for listening, and we will see you next week for another episode. Thank you.
That was funny. What did you do?
I don't know if I put my thumb up or something, and I thought I was doing a thumbs down.